Good afternoon. This is Charles Cochran of CNFT Futures. I'm here to go over a little lesson of how we trade the markets. One of our favorite markets to trade is the 30-year bond, the ZB contract, and this is a trade that we had on October the 2nd. We are discretionary traders. We have an idea, then we have a level that we like to execute the trade from or at, and we have one indicator, deceleration. That means the buying or selling is drying up. So we came into the market that day wanting to sell 15s to 19s, and we wanted to buy 1s to 5s, could pay as high as 9. So when the day session opened, we had all of the selling behind us. We could see that coming in the morning, so we were sellers first to see if we could take out this low. And then see if we could take out this low as it transpired. So we had a called sell at 15 to 19. The market finally does rally, and it gets up to 17, which splits our sell zone right here. We know the buying is dried up because of our one indicator, that pink square that tells us that 95% of the buying has stopped at 17. Now, because we've made a new intraday high, we're not going to take this trade until we get a retest of this high, plus or minus a tick. So on this bar right there, we get our retest, and we had an opportunity to sell as high as 16, or if we entered the market on a sell stop, we would have filled at 13 or 14. Now, if you don't want to fill at 13, you can put a sell limit, and you would have filled at that on that bar at 14. So here we are short. The first level that we have to take out is 12. It happens to be 50% retracement, and that's a number that can hold. So the market comes down, so when we break support right here at 15, we've got 2 bars of selling in our favor, and this 12 is never really contested. The first move is right through that. So that was the first gate we had to get through to get to our expected profit on that trade, which is 6 to 8 30 seconds. The second gate we have to get through is at 8. Now 8 is a market number. It's a round number. It could hold, and you can see the market holds for 3 bars over here. So at this point we have a decision to make. We can see in this area that there's a little more buying than there is selling. We can see in this area that the net cumulative buying has increased, so an exit at 9 is a possibility. Now the expectancy for this trade is 6 to 8 30 seconds, so if you had a sell stop and not a sell limit stop, you got out at 9 and you picked up 4. If you had entered the trade at 14 and you got out at 9, you picked up 5. If you'd entered the trade at 16 and you got out at 9, you had picked up 7. The market comes back up and trades up to the 50% line. That holds. Comes down to make a new low, and it puts us into our recommended buy zone that day of 1 to 5. And if you'd taken that trade off of a head and shoulders pattern, you would have entered when you took out this bar's high at 8. And the market just went ahead and traded all the way up to 26 after that, with some help from the E-mini. So having a setup, which is a retest of a high or a low, 2 bars of space in between is desired with deceleration, and deceleration in this case would be this bar is skinnier than that bar, so there's less buying in this bar than there was in that. The pink square tells you that the buying has dried up. We don't take out that high, so everything is clear to retest this low and or take it out. Now one of the problems beginners face is they're in a trade like it, and their mind is going to start whirling, and they're going to say, what? There's 12. It may not come out, and if 12 doesn't come out, I'm only going to make 1 or 2 ticks. In fact, I could get a loser. Now an experienced trader would say, I'm going to see if 12 can be taken out. So the mind, the approach of the mind and the way the mind looks at things is different than what if this is wrong. It's I'm going to see if it does come out, and if it does come out, then I'm going to see if our number 2 gate comes out, as opposed to, what if it doesn't come out? So you really do have to look for stuff that backs your trading. So right here in this area, right in there, we get a lot more red than we do blue. So this tells me that there's more selling. In this area right here, we've got a little more blue than we have red, so somebody's at least covering their shorts. When the market starts to sell down here, you can see right in this area we get more selling. So you get the right kind of feedback from the market, and you need to pay attention to the things that are working for your trade as opposed to the things that might not work. Beginners and novice traders always think in terms of what might not work, and experienced traders say, well, I'm in, and these factors are going in my favor, and this one may not. If you'd like to know more about us and what we do, please come to our website, www.cnfuturestrading.com. At our website, you'll get an overview of the software, our trading methodology, and our educational programs. And we have lots of educational videos and tapes that show you how to trade, our methodology, and how to trade volume as opposed to price. Please contact us via email at info@cnfuturestrading.com or call us directly at 312-361-3895. Looking forward to seeing you in our main trading room in the not too distant future. In the meantime, good trading.